the nuclear giant powering AI's future. Why Constellation? Energy could be 2025's biggest energy winner. You probably drive past a nuclear power plant without giving it a second thought. But what if I told you that one energy company just signed the biggest power deal in history to restart a nuclear reactor that's been sitting dormant for 5 years, and the buyer, Microsoft, paying premium rates to power their AI data centers? Meet Constellation Energy, ticker CEG. Headquartered in Baltimore, Maryland, Constellation operates the largest nuclear fleet in the United States, with over 22,000 megawatts of nuclear capacity. That's 67% of their total generation portfolio. Here's the kicker. Microsoft is paying Constellation Energy an estimated $110 per megawatt hour. That's nearly double the current market rate of around $60 for wind and solar. Why would the world's most valuable company pay such a premium? Because data center electricity demand could rise 5-fold by 2035, reaching 176 gigawatts. And not just any power. We're talking about massive, reliable, carbon-free electricity that can run 24/7 without interruption. Their nuclear fleet alone operates at an industry-leading 95% capacity factor, meaning these plants are running at maximum efficiency nearly all the time. Instead, they're a leading energy supplier to businesses, homes, and public sector customers nationwide. Using long-term power purchase agreements that lock in premium pricing for decades, data center electricity demand doesn't fluctuate during the day in the same way as demand from residences. An AI data center consumes as much electricity as a small city. They can't just plug into the regular grid and hope for the best. The U.S. is home to the world's largest national nuclear fleet of reactors, 94, which provides almost a fifth of the country's electricity supplies. And Constellation owns the biggest chunk. You can't just build a new nuclear plant overnight. It takes 10 to 15 years and billions in regulatory approvals. But restarting an existing reactor, that's exactly what they're doing with 3 Mile Island. While everyone's been watching Tesla and NVIDIA, the real AI infrastructure play has been hiding in plain sight. Nuclear power plants provide firm baseload power, operating 24/7 regardless of weather conditions. Solar panels go dark at night. Wind turbines stop when the wind dies. But nuclear reactors, they keep humming along at 95% plus capacity, day and night, for 18 to 24 months between refueling cycles. With a current market cap around $80 billion, Constellation has quietly become one of the S&P 500's best-performing energy stocks. Constellation Energy Corporation trades on the NASDAQ under ticker symbol CEG, and it's not your typical utility stock. But here's what makes this company fascinating. Constellation is the nation's largest producer of reliable, emissions-free energy and serves 3/4 of Fortune 100 companies. Data centers consumed about 4.4% of total U.S. electricity in 2023 and are expected to consume approximately 6.7 to 12% of total U.S. electricity by 2028. Goldman Sachs expects even more dramatic growth. AI is poised to drive a 160% increase in data center power demand. Between 2023 and 2030, after the November election, then President Joe Biden unveiled a 37-page roadmap to triple nuclear energy capacity in the U.S. by 2050, and President Donald Trump signed executive orders to boost the nuclear industry for the first time in decades. Nuclear has bipartisan support. The regulatory moats are massive, the capital requirements are enormous, and the technical expertise is rare. With 21 reactors across 12 facilities, Constellation has multiple shots on goal for future Microsoft-style deals. The 20-year power purchase agreement will support the restart of 3 Mile Island, Unit 1, requiring approximately $1.6 billion in capital expenditures, with an estimated 2028 in-service date. The Federal Energy Regulatory Commission on Friday rejected an agreement to increase the power capacity of an Amazon data center connected directly to Talen Energy's nuclear power plant in Pennsylvania. Restarting a nuclear reactor requires U.S. Nuclear Regulatory Commission approval following a comprehensive safety and environmental review. While Constellation anticipates that the NRC will complete the review in 2027, delays are possible. This decision could complicate future co-location deals, though Constellation is increasingly focused on potential data center projects that connect to the U.S. electrical grid rather than direct connections. Nuclear power plants produce electricity without directly emitting carbon dioxide, a consideration for technology firms investing in energy-intensive data centers that are trying to meet self-imposed emissions reduction goals. This isn't about training AI models, which happens once. It's about running AI applications that billions of people will use every day. But here's what Wall Street missed. This isn't just one deal. With data center power demand set to triple by 2030 and nuclear being the only scalable, carbon-free baseload option, Constellation is sitting at the intersection of America's biggest growth trends. Like this video? Take a moment to drop your thoughts in the comments. And don't forget to subscribe for more deep dives into hidden S&P 500 winners. Analyst Ryan Levine from Citi downgraded CEG to hold with a price target of $318, noting that the stock's rally prompted a reevaluation of its value. CEG stock has more than tripled since ChatGPT's launch in November 2022. But this is just the beginning of a multi-decade growth story. It's proof of concept for a repeatable business model. We're talking about a company that provides the backbone electricity for America's biggest corporations, yet most retail investors have never heard of them. The company was spun off from utility giant Exelon in early 2022, and since then, shares are up more than 200%. Here's a scale fact that'll blow your mind. Constellation's nuclear, hydro, wind, and solar facilities have the generating capacity to power the equivalent of 16 million homes, providing about 10% of the nation's clean energy. But the real story isn't just about being big. It's about being perfectly positioned for the AI boom. While tech investors have been chasing semiconductor stocks and AI software companies, they've missed a critical piece of the puzzle: power. Here's the business model that makes Constellation unique. They don't just generate electricity and sell it to the grid like traditional utilities. Think of it this way. When a tech giant like Microsoft needs to power a massive AI infrastructure, this is where nuclear power becomes irreplaceable. Constellation's competitive moat is massive. The Microsoft deal was a watershed moment. Amazon paid $650 million for a nuclear-powered data center from Talon Energy. Microsoft locked in 20 years of power from Constellation's 3 Mile Island. Alphabet will pay to develop and construct several reactors to provide 500 megawatts of power. Big Tech has officially gone nuclear, and Constellation owns the biggest fleet. Let's talk numbers, because Constellation's financial performance has been absolutely stellar. For Q4 2024, the company achieved GAAP net income of $2.71 per share and adjusted operating earnings of $2.44 per share, while full-year figures reached $11.89 and $8.67 per share, respectively, exceeding guidance. But here's where it gets interesting. Constellation raised its full-year 2024 guidance to $8 per share, and the Microsoft deal is expected to supercharge future growth. Constellation expects its fixed-price contract with Microsoft to increase its annual base earnings per share growth rate from 10% to 13% from 2024 to 2030. The company's operational efficiency is best in class. The nuclear fleet produced 45,510 gigawatt-hours in Q3 2024, achieving a 95% capacity factor. That's industry-leading performance. Compare this to solar and wind, which typically operate at 25 to 40% capacity factors due to weather dependency. From a balance sheet perspective, Constellation is rock solid. Here's the margin story that investors love. Nuclear plants have high upfront capital costs, but incredibly low marginal operating costs. Once you've built the reactor, the fuel costs pennies compared to natural gas or coal. This creates massive operating leverage when power prices rise. The recent acquisition news adds another growth dimension. Constellation agreed to pay $16.4 billion for privately owned geothermal company Calpine, creating the largest independent power producer in North America, owning more than 60 gigawatts of capacity. What's remarkable is the quality of earnings. These aren't one-time spikes, but long-term contracted revenues with investment-grade counterparties. The investment thesis for Constellation boils down to 3 massive secular trends converging at once: the AI power boom, nuclear energy renaissance, and corporate carbon commitments. First, the AI demand shock is just getting started. But here's the key insight. Inference is expected to be a primary factor in surging power demand. With power demand for inference, tasks projected to increase at a 122% CAGR through 2028. Second, nuclear is experiencing a policy renaissance. Third, corporate carbon commitments create a premium market for clean baseload power. Constellation's competitive advantages are nearly insurmountable. You cannot build new nuclear plants quickly. 3 Mile Island would be the second nuclear plant to restart operations in U.S. history. Management has guided for adjusted operating earnings growth of 13% or more through 2030, up from 10%, and that's before considering additional restart opportunities or new partnerships. No investment is risk-free, and Constellation faces several legitimate concerns that investors should understand. Regulatory risk tops the list. Execution risk on the 3 Mile Island restart is real. Valuation concerns are legitimate after the stock's massive run-up. Market competition could intensify as other utilities pursue similar strategies. However, Constellation's first-mover advantage and scale create significant barriers to entry. The biggest risk might be political shifts that reduce support for nuclear power, though current bipartisan backing suggests this is less likely than in previous decades. Here's the bottom line. Constellation Energy is the best pure play on America's AI infrastructure boom, and most investors don't even know it exists. While everyone's been chasing NVIDIA and semiconductor stocks, Constellation has quietly become the power company that literally keeps AI running. The Microsoft deal validates a business model that could be replicated across Constellation's entire nuclear fleet. What do you think? Is nuclear power the secret weapon for AI infrastructure? Remember, this content is for educational purposes only. This isn't financial advice, and you should always do your own research. But if you're looking for a way to invest in the AI revolution, then the answer just might be CEG.